Hello guys, welcome back to the channel. It has been long since we last had our last video. I think it was the last 5 days or 6 days. I've been busy, but finally I've come back with another video. So today we're going to be talking about how to draw support and resistance. This one is not going to be in the format of the previous videos. I've kind of changed the format to add more context to the videos to make them more explanatory than just giving screenshots. So we are going to be learning how to draw support and resistance. Most traders draw support and resistance wrong, and it costs them more trade. So in this video we are going to be learning exactly how to draw support and resistance the correct way. So by the end of this video, you will know how to draw support and resistance zones accurately, common mistakes that most traders make while drawing the support and resistance, how to use these levels for real-time entries, and then you'll have a bonus tip, how to combine support and resistance with demand and supply for zones and beta confluences. Basically, how can you combine support and resistance with demand and supply in order to get better zones to trade from. High probability setup, that is going to be the last one. Basically, I'm going to be showing you how high probability setups look like, or I'll give you a sample of what I consider to be a high probability setup. So basically, you're going to learn a lot of things about support and resistance, and this is the only video that you're going to need for your support and resistance basics. You do not need a lot of things. You just need one thing you can tap out of, and then you can use it to trade. Basically, I do use support and resistance also, but I combine it with supply and demand. So we shall proceed to the first step, or the first concept. However, so far we are at 499 subscribers, so there is missing only one subscriber to make 500 subscribers. That mark, we moved from 1 subscriber to around 400 subscribers so fast, but reaching 500 has been so hard. So that one subscriber should top up. People who are watching but are not subscribing, kindly subscribe. And after we reach 500 subscribers, I'm not going to be telling you guys to subscribe anymore, so it will be at your own discretion to subscribe or not, because now we've hit the 500. The rest can just come if they want. If they don't want, let them watch the videos and quit. So with that being said, let's proceed to the first concept of the video. So we have a drawn model of how support and resistance looks like. So support is where price tends to stop falling, then resistance is where price tends to stop rising. But it's not just support and resistance about lines, it's about zones and reaction point. So what this shows you is that up here is where our resistance is, this black line, but down here is where our support is, this black line down here. And also it goes ahead to say that support and resistance, they are not just lines on the charts, however they are zones, like it is a whole zone. And when you're drawing them, you'll have to include some things that I'm going to show you in the next slide. So now see this as your chart, and these are your candlesticks moving up and down. So this would be like a ranging market. This would be like a ranging market, the whole thing here. It is a ranging market. So as price moves up and down, it creates support and resistance. Up here is our resistance and down here is our support. Why is this our support? Because whenever price comes at this level, it stops falling and gets the support that it needs to bounce off and then goes back upwards. When it comes back here again, it does the same thing, gets the support it needs to go back upwards. Comes back again, it gets the support it needs to go what? Back upwards. So now, how do we trade this, or why do some of the traders, I think most of the traders use support and resistance. Why do most of the traders use this? They have a view that whenever price comes here, more buyers come in to buy at this price level and then pushes price back to the upside. Same thing when it comes here. However, when you see up here, which we are seeing as our resistance, same thing happens. Whenever price comes back here, more sellers come in and pushes price down to the downside. So with the assumption that price will go down when it comes here, traders will be willing to sell when price gets to this price level, hence creating our resistance. So now this becomes resistance and this one becomes support. That's where the idea of support and resistance came in. Price bounces within ranges. As it falls from up, it is our resistance. As it buys or bounces from down, it is our support. So we shall proceed to the next slide and I show you how exactly this makes sense. So when you come to this slide, this one says zones, not lines. They are zones, not lines. Don't use thin lines to draw your support and resistance. Use zones that include wicks, candle body ranges or body closures. So like for example, in the previous example, these were lines. There's a black line up here representing resistance and there is a black line down here representing your support. However, price does not react on line, it reacts on zones. Within zones or price ranges, this is whereby the buyers or sellers say, or the traders say, that we are buying when the price is ranging around this area, not on a particular price. So we shall go back to our chart example. So now this one is a clear chart example of support and resistance. Basically it is mimicking the previous one. So what do you see? You see that price was moving in a ranging format. A ranging is where we have price moving up and down, but in a particular box that it is not leaving. Basically when it reaches up, it falls. When it reaches down, it goes up like that for a particular period of time. So price is in a range. So this might be a price of a particular asset. So now when we're doing support and resistance, we want to see spots where price is bouncing for longer periods of time. And don't worry, shortly we shall be going to the charts to identify these zones. So now here price is in a range. So price went up and used here as resistance to fall down. So you mark this area. As price uses here as resistance, you mark it and then stretch it to the left, to the right hand side. So as price fell down to this area, formed support and went back up, you marked also this area and stretched it to the right hand side. So now what happens is you expect price to be moving within these ranges. So now if price comes back to the previous high where it was, this high here, and then price manages to come back to this area, you are looking to sell. You sell to the downside, put your stop loss slightly above this area and then sell to the downside here. So as price reaches here, your take profit is going to be the previous support. So as price reaches here, you're looking to buy because now we are at support. So you're going to put your stop losses here and then target the previous high. So we're going to repeat the same process over and over again until when you achieve your trading targets. So you just have to keep in mind that at support we are buying, then at resistance we are selling. So you just have to identify when has price reached the support, when has price reached the resistance. So we are going to be, I'm going to proceed. Let me just remove the things here. Okay, so now this is a chart example of how support and resistance should look like. This one can be drawn on any time frame. It can be the 4-hour time frame, it can be the 1 hour, 5 minutes, 1 minute, even 10 minutes, any weekly, daily, monthly, any. However, you just have to keep in mind that the higher the time frame, the more strong your support and resistance levels. So day traders, you can use 1 hour, you can use 4 hour, you can use 6 hours, or even daily time frame. Then swing traders, you can use from daily, weekly, monthly time frame. So when we proceed here, I show you steps on how to draw your support and resistance the cleanest way. So first, on the left hand side, we have do's and don'ts on the right hand side. So what do we have to keep in mind as we are drawing our support and resistance? We have to switch to a higher time frame, that is weekly, daily, or 4 hour. So how is this dissected? Weekly is for swing traders, daily is for day traders, and 4 hour is for the scalpers. So if you're trading within intraday or you're scalping, your high time frame is going to be 4 hour, or your highest time frame can be 4 hour or 1 hour. I just omitted that one. Then if you're a day trader, you're holding trades within the day or 2 days, you're supposed to use your daily as your highest time frame to draw your support and resistance. Weekly for swing traders, and also monthly, 3 months, sometimes some position traders go up to 6 months or 1 year, like that. So number 2, look for 2 or plus bounces on the same level. Look for at least 2 minimum bounces on the same level. If we come back to our example here, you see here we had 1 bounce, price went up, 2nd bounce, price went up. So now as long as you have gotten your 2 bounces, you're good to go. Here we had 1 bounce, price dropped, 2nd bounce, price dropped even massively. So you have your 2 bounces here. So after this 2nd bounce, that is when you draw your resistance. Same thing here. After this 2nd bounce, this is the 1st bounce, price goes up. The 2nd bounce, that is when you draw your support after the 2nd bounce. And you see what happened when price came here, it bought massively to the previous